So what's the difference between value and growth stocks? You've been hearing about them often. Most often, though, you'll hear about growth stocks. Why? Because growth stocks are everyone's favorite these days. First, let's define what they are. A value stock is a stock that is cheap relative to where its underlying assets are, right? That might be a company that might have traded down for market conditions, but the company is still doing very, very well. Therefore, the company would be considered cheap at that level, and that would be a value stock. You would buy a value stock because you believe it is undervalued and that it's going to, at some point, realize its true value, and you profit by having found that opportunity. On the other end of the spectrum would be a growth stock. Growth stocks typically are overvalued, and the reason that they're considered to be overvalued is because the stock price has factored in potential future growth. So when you buy a growth stock, you're investing in a company that you expect great things from in the future. Let me give you some examples of that. A growth stock might be technology stock that has new technologies and a lot of potential technologies in the future. Of course, is earning lots of money, has lots of earnings growth today, and you expect that earnings to continue to grow for many, many years. Those stocks that come to mind there might be a company like Apple, Amazon, Tesla is a growth stock, and many others like it. On the value side, there are many companies that are typically more in the industrials that would be considered value stocks. Those companies typically are not expected to have great growth, but you invest in them because they have slow and steady growth. Those companies typically pay dividends. So that's where you would look for value stocks.